Over the past 2 years, I've scaled from making just 3K a month from trading to making over $85,000 in a single month and 8K in a single day, which sounds crazy. So today I'm going to show you exactly what tools I used, how I did it, and exactly the whole process that went into it, right? And I'm going to teach you how to copy that very exact same framework that other traders are also using that takes them from being boring retail traders struggling to pass an eval to being like guys like Anthony who made over 20K in a single month. And this all boils down to the GEX order flow method. Now, what goes into this? Just the basis of it, and we'll get into it later during the video, is 60 to 80% of all the NQ volume comes from dealers and hedgers. And these guys have levels that will tell us how they will react, right? Now, these levels are the max pain points, and if we can figure out what's going on at these pain points, we can figure out where they're going to move the market at that moment, giving us the timing every trader craves for. And lastly, we're going to use order flow to identify and verify these levels. So, before we get into this, I need you guys to realize something very important, right? Less than 7% of all traders ever become profitable. And it's because they're all taught fancy patterns that mean nothing, right? And again, I'm not here to attack anybody, I'm not here to discredit anything, but most of the stuff out there is just renamed and it's flawed theory, stuff that has been around for years, yet somehow the masses follow it and the masses decide to remain unprofitable statistically. So something is not adding up, right? Now, going against this and learning the real market mechanics is what allowed me to make, again, over 8K in a single day. And again, if you guys want to learn fully about it, want to work with me, get these results directly, just click the link below and we can see if we're a good fit to work together. But if not, let's get straight into the video so I can explain to you guys this exact strategy that not only made me 8K in a day, but helped Anthony make over $20,000 in a single month. The first step in this methodology is to understand where the industry is currently at, right? So let's go straight into this. Now, options trading has doubled since 2020, right? Now, what does this affect? Whenever you purchase or you sell an option, somebody needs to fill that order in for you, right? That is a dealer or a hedger. What happens? When they fill, let's say you take a buy, they're going to take a buy with you to be able to sell it to you at a higher price. However, if price goes down, they don't want to lose money with you, right? So what they're going to do is they're going to sell the underlying assets. So let's say you take a buy on NDX options, right? What they will do is they will sell on NQ futures to hedge against the downside, right? That's kind of how it works. So if options trading has doubled since 2020, then that means that futures volume has been doubling since 2020, but not many people are speaking about this because this is kind of like the quiet factor that's actually moving the markets. Now, these dealers and these hedgers, they're going to be more sensitive and more aggressive because they have more volume to fill, meaning there's more money on the table for them. However, they have certain levels where delta and gamma are too sensitive. What is delta? Delta simply means how quickly the price of an option is changing, and gamma correlates to gamma exposure, which the more the delta changes, the more the gamma exposure changes. And we're going to go that in a bit, right? This is not going to make you rich in 30 days or super quick just because this method takes time to learn. However, once you do learn it, you're going to start seeing some nice results. Why? Because most traders are always struggling the where, the what, the why with their trades, right? No trader has a concise when, where, what. And those who do are profitable, but it's a very select few. This is what the GEX level brings us. These max pain levels tell us where can we trade instead of guessing maybe at this gap, maybe at this weekly opening, maybe at this level, maybe here. No, you traded the GEX levels because you know that these levels are going to be the ones that are going to produce the major moves in the market, the same moves that you get FOMO because you constantly miss out on. These levels, again, they work like magic once you know how to use them, but they are not going to make you rich quick, right? And again, most people end up getting trading wrong just because they think I have a new strategy, I'm going to make money quick. If I don't make money quick, the strategy doesn't work. That's kind of why most people are not good at trading, right? It all starts off with the wrong psychology. They're going to remain profitable regardless of the strategy because they're already psychologically training themselves to have bad habits, right? And again, people think, oh, psychology this, psychology that. The bad habits are going to come from a lack of understanding of how your strategy works, why your strategy works, and all the entourage around it, right? Once you understand it, and once you understand why your strategy works, when it works, how it works, most of the psychological barriers get removed, right? And that's why most people actually never become profitable because their strategy is not built for good psychology. It really is as simple as that, right? And again, people start getting emotional because they try, and they never end up making it. And what they need is a strategy that's going to prevent those emotions from coming into the charts. So let's dive into the GEX and explain exactly, the strategy that's going to remove all the emotion and all the psychology from the charts for you, right? And again, I've seen this as a CEO of a prop firm. I've talked with traders who've made multiple six figures at Kronos. I've also talked with a lot of traders who have never even gotten a single payout. And what I noticed is data-backed strategies, right? Order flow traders, GEX traders, they tend to outperform retail concepts. Again, that can be ICT, SMC, patterns, past reflecting indicators. Not saying one is better than the other. I'm simply stating the facts, right? And that is something I noticed is these order flow traders, these GEX traders, they tend to have better risk management. They tend to have less blow up days. They tend to take less trades compared to the others, right? And again, that is because order flow and database strategies, they work with your psychology and with your emotions, not against it. So for the first time, when traders start using these tools, they're in an environment where they're not conflicting against their strategy or against each other. Let's get into the nitty gritty of our strategy. Now, the GEX levels, we have several different levels because these dealers are not trading the same way everywhere, right? There's levels where they're going to need to buy more. There's levels where they're going to need to sell more. There's levels where they're going to need to hedge against themselves, right? So the put support is a level where dealers are going to buy, right? That means that there's a lot of puts that need to get filled, a lot of calls that need to get hedged, right? Because there's way too many sellers. So they need to create a put support so that they start hedging right there. What happens? Since they're selling so much on the options level, they're going to have to buy at the futures. They're going to buy at the futures underlying level, right? They need to create this support with buyers through the hedging, of course, and that's going to create a move to the upside. Call resistance, same thing. They need to sell the call resistance. The gamma wall, it's kind of like a magnet level. We can dive into that in another video because that is a more complicated video to explain. Or if you want to work directly, again, we dive all deeper into that. But essentially, the gamma wall acts like a magnet, right? Just a quick overview. Price comes down into it, it consolidates around, goes lower, consolidates, goes above, right? And usually we either want to sell into it, sell away from it, buy into it, buy away from it. The HVL, I think, is the most important level in all of GEX, just because above the HVL we have positive exposure, below the HVL we have negative exposure. That means that above the HVL, as price goes up, dealers are going to sell, making moves slower with more retracements, right? They're going to keep selling into it, so it gives it more retracements and it's slower, right? Same thing if it's going down, they're going to buy into it, creating more retracements and a choppier market. Now, below the HVL negative, that means that as price goes up, dealers are going to keep buying, right? And they're going to keep adding here, and they're going to keep adding here, and they're going to keep adding here. And as it goes down, same thing, right? Add, sell, sell, sell. So the HVL really determines, hey, if you have levels above the HVL, how you trade them. If you have levels below the HVL, how you trade them. Why do I explain the HVL now? Because that goes to the GEX. GEX levels are simply levels with gamma exposure. They don't have a tide reaction to them by any means, right? So if we are in positive HVL, we want to reject from the GEX, right? So if we have a GEX level here and we're above the HVL, we want to trade the rejection. And if we are, let's say, below the HVL and we have a GEX level here, we want to trade the break and continue. It dictates everything about it. That's why exposure is so freaking important. Then we have the one-day min and the one-day max. The one-day min is the lowest level of the day at which dealers and hedgers are going to be filling. So under the one-day min, right, let's say we have the one-day min here, we can expect a lot of buying here. However, if we are not able to see buying power come from here, we are likely going to see a very aggressive rally to the downside. Same thing with the one-day max. If we don't see selling at this level, very aggressive selling, we are expected to see a very aggressive rally to the upside. And again, my biggest trades that I've had are the levels that have the one-day min and the one-day max. For example, this 8K trade, which I'm going to explain below, it was simply due to the fact that I understood that, hey, we are in positive exposure. We have a loaded one-day min. And it's what I'm going to get into. How do we know what levels are going to work? How are the levels going to work? Why are the levels going to work, right? Well, what tells us that is the order flow terms, right, which are going to be our key terms here. We're going to have liquidity, which, again, it really is as simple as the orders in the market. I personally use Bookmap to see liquidity, right? You can see the passive orders here. Passive orders are the red hot liquidity or orange liquidity. Active orders, we're going to see these buyers and these sellers all around here. That's what kind of tells us who's active, who's passive. And that just gives us a better idea of, hey, who's actually moving the market, what's actually moving the market, etc. Again, this is an active buyer, this is an active seller, this is a passive buyer, and this is a passive seller. It really is as simple as that, right? And then once we understand this, again, we know active buyers, active sellers, absorption, and takeover. But what I want you guys to understand is when we can correlate these levels and tell us what's going on. For example, we had the call resistance level. It was just right around here this day, right? Let me change the color on this one real quick for you guys. Let's make it yellow. So we had the call resistance right around here. What do we see? We see a price goes above the call resistance and gamma wall, right? So remember, call resistance, we want to sell. Gamma wall, we want to either trade away from it or we want to sell into it. So we see it, we're above the gamma wall. And what do we see? Well, we see that we had all this liquidity here, right? We see that, hey, we had all this liquidity at this point. Buyers came in, went through the sellers, but now they're weak. We don't see any more buyers following through, and then we see them weaken and come back under these sellers. Therefore, these buyers did not have enough strength to push further, telling us that a sell is a good idea. What do? Hey, do we have any other targets? Is there anything else we can do or see to tell us it's a good trade? Well, we have all this liquidity down here, and we actually had a GEX level down under here. So it's a good idea to take a sell because we have opposing liquidity pulling price lower, right? Again, guys, the name of the game with most strategies is go to the one day, then go to the 4 hour, then go to the 1 hour, then go through all these time frames that are just going to create analysis paralysis, and it's going to make it just a lot harder to actually spot any trades. The name of the game with the GEX is you're going to find your level, right? So you're going to find your level, super straightforward. Let's say my key level is going to be my put support. Okay, so we have our put support. Then you're going to wait for price to get to the level. So you're not going to be trading most of the time with this strategy. You're just going to be waiting and waiting and waiting and waiting until price is at a level. Once price gets to the level, you need to understand what's the narrative behind the level. Okay, put support, and we are in a positive GEX environment, right? Beautiful. So put support, and we are in positive GEX. That means that we want to see a buy. So we already know the where, and we already know the what, right? Where here, what do we want to see? We want to see a buy. So what do? We wait for the GEX, right? We want to see either liquidity come in, right? Oh, okay, I want to see buyers be here. I want to see them get filled, then reject price. Or hey, I want to see price touch the level, and as price touches the level, I want to see liquidity follow, which is probably my favorite setup, right? When I'm seeing a level and then I see that price just decides to follow. As price go higher, we see that we have all this liquidity just following price. Let's assume this is liquidity. So as price goes up, we want to see these orders just following price and following price and following price, right? And keep following price. Or we want to see that we had sellers here. We want to see price break through the sellers and hold. That's our win. Most people get the win wrong. Oh, based on the macro, based on the time, based on a candlestick closure. No, that's not how it works, right? The win is going to tell you why is your trade valid and is your trade being pushed by the major players. If you do not have strong liquidity following your trade, you are going to be relying on market orders to push your trade. Good luck, Charlie, right? That's not going to work out. So let's go into the example. We had, again, this is the example that made us the 8K in a day. And actually, Sir Anthony actually took this trade too, and it was for this payout for $6,000 over here. W. Anthony. Again, Anthony worked with me for over 7 months. If you guys want to go through the same process he went, from being completely unprofitable for 2 years to becoming a multi-5-figure trader in just 7 months, click the link below. We had the GEX level over here, and we were under positive exposure, right? So, and again, feel free to pause the video, take notes, rewatch it. So we were under positive exposure. That means that the GEX, we want to see a rejection, and the 1-day min, we want to see a rejection too, right? We know we're going to be range bound. Okay, so this is going to be the area where I'm going to be looking for trades, right? Either here or down here, right? This is kind of like our hunting zone. This is our playground. So once price gets up here, okay, well, I know this is my where, and I know my what. I want to take a sell from here. We're under positive exposure, right? Okay, so what do I need to see the exposure? Well, I need to see the when. First thing is we run into some liquidity right above this area. Try to get the book map for this day. Was not able to retrieve the data feed. But, okay, we see the liquidity come in here, right? Boom, we had all these sellers that price drove into and immediately rejected, right? Look at this wick. Again, a wick just represents rejection. I don't really care about the close, whatever. But just look at how much price rejected in a single minute here. After that, I see at this block, we took this liquidity and then we had liquidity following here and here. And it stopped right here, right? So the moment I see, and we had some buyers over here, that again, as soon as we saw this major candle, and this is a huge fallacy I see with most strategies, is they will see a candlestick like this and they will think it's automatically bullish, Or they'll see this, oh, this failed to this created an IFEG. Now we need to short here because it encloses. That's not how this works. Or hey, this is a fair value gap. Let's trade the upside. No, this candle, we created some buyers down here that supported price. As soon as we break under those buyers and I see that we are pushing with sellers, I know that this over here is not really something that's going to affect my trade, or it's not relevant to my trade idea. So what do? I immediately ignore this when most people would think this is a bullish sign and get ready for the downside. So as soon as we take out these buyers and I see sellers pushing through, that is my win. That is when I take the trade right here. I put my stop above the highest point where we had buyers, right up to here. Buyers were present. From here, sellers came in. So if it goes above here, these buyers are back here. If it doesn't come above here, the sellers took over from here, which is my hypothesis. Now, what do I target? We had the one-day min full of liquidity. We had a very red chunky block down here. And again, the one-day min, it's one of the stronger levels. The one-day min and the one-day max, when they do have liquidity, they tend to hit at least 70 to 80% of the time, right? It's just about the timing, which is what we just talked about. So I target my one-day min all the way down here, hold the trade. I did end up taking some partials just right around the 640s and then let it go through. Again, you can see in the orders over here, this is not like straight up. We scaled into the trade and then we scaled out. Really is as simple as that. And again, guys, that's just what makes it super easy, right? With this strategy, again, I'm not saying it's easy to learn it to be profitable, but it just gives you an easy framework to trade with every single day, regardless if it's choppy, regardless if it's super volatile, regardless if there's tariffs, whatever this is. It gives us a great approach. So again, guys, if you want to have this same approach, if you want to be taking these quality trades and making that much money, all you need to do is click the link below, see if we're a good fit to work together. I'm going to reach out to you personally. There's not going to be like a salesman or a closer or setter that doesn't know anything about trading talking to you. If I think we're a good fit to work together, we'll be talking soon. And regardless, guys, if you want any other videos, if you guys have any other questions related to this, please let me know. I love explaining this to you guys. I love talking about this. So I'll see you guys on the next video. Please remember to like and subscribe. That way we can keep pumping out some more content and we make sure you stay up to date with the latest news and how to trade with the best strategy, in my opinion. I'll see you guys. Have a great rest.